The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and we're looking at the Dow of 273. It sounds like a whopper of a move. Well, wait a minute. We had an 800-point move down just 3 days ago, and that started in the 25,980s, went all the way down to 25,339 over the last 2 days. So this is a good comeback. Now, let me go through things one at a time. Questions I had, I'll try to deal with them. I got a bunch of questions I want to answer because they were from some subscribers and other people that listen to TFN all the time, ask questions. So let me get to what I need to do right now. You see the H pattern. This lowercase h pattern, in the Chapman wave methodology, we call it the dreaded H, because if it fails, it can go much lower. We've seen that many times before. Look at that little h over there, and that little h went to a lowercase m. Now I think what we're looking at is the chance that we have some kind of a lowercase h going to a lowercase m formation, and that essentially says that there's limited upside before we start to digest gains once again, and bad news comes filtering in. There was like a 48-hour recession news report. I mean, there were reporters talking about recession who don't even know how to spell recession. So that said to me, we've reached a minor top in news when the layperson is talking about a recession. When I got asked questions about, so what's this yield? What are they talking about recession? It's there. And it'll certainly come about as something very important, but not right now. It's just, if it becomes as a front page news, it's already passé, it's done. So that part of it now is out of the picture for at least a short while. What I am looking at here are chart formations. And my biggest concern has been, for some time, ever since we actually went short on the 16th of July, at the all-time high, 7 points off the high in the Dow, we started shorting at 27,391. 27,398 was the all-time high. And I will be having a webinar coming up on Wednesday night, and we're going to be talking about what to do in this particular environment. What sectors look like they're oversold and they're ready to bounce? What stocks? I'm even starting to, today we actually started a position in I'd call it a cyclical stock, but this is probably correctly so one of the, I would call this a Dow Industrial. And one of the reasons is we haven't touched this for ages. I want you to at least get a starting position because it has a dividend, a nice dividend, and it has a potential that if the doji low that it made yesterday is at least the start of attempting to form some kind of a bounce, that's going to be really good. That's going to say, hey, these are the guys that are going to have a fabulous end of the year run. I don't know. I have no idea. Nobody knows in the market for sure, because how can you? That's the whole thing about a market. There's a big guessing part of it, and there's an analysis part of it. You try to put the two together. So that was one thing. The other is, in this particular weekly pattern, the MACD, no matter what happens today, we're up 271. Even if we jumped another 200 points, this MACD is not going to change to positive. It has turned in an M-shaped formation that I've been talking about for weeks that has gone down. There were just two peaks to this particular rally from the June 3rd low, where we actually went long the day of the low, and we went short the day of the high. And I'm not sure we're going to be able to time the next entry point to go long, but I have lightened up somewhat on the short position. And today, as I say, we took two stocks as of now. One is about even and one is sharply higher. You just got to do your analysis and see if you can participate in the market and be a little under the radar so that you're not facing the heavy winds that are coming up against you. So that's all I'm trying to do right now. And Well, and another stock made an all-time high that we have right now. It's looking really good. I think it's going to be pulling back very soon, but it has gone really well from the moment we bought it all the way up to all-time highs. So, and our bank stock is holding very nicely. It's had a very nice pop today of about almost 3%. I haven't added to it yet. I think the banks need a little more digestion. So now let's talk about this weekly chart. You see this arch formation? It runs up. It gets into the Chapman wave inside track. That's this green and dashed pink line right here. It stalls. It has a little doji candle. I call it the silent doji candle. Has a horrible candle to follow. That's a very big negative, but I refuse to put a down arrow there until I had some conviction, even last week, because on Friday we closed pretty close to the 14-period moving average. The key moving averages hadn't closed negative, but the stochastic was really close to turning down, still way above 80%, and the MACD hadn't yet crossed negative. Now look at it, very negative in both, and way underneath the 14-period moving average of 28, no, not 43, that's the 9-period, 26, 397, 26, 800 is the other one. So we're looking at the chance that by next week the moving averages could cross negative. So to answer one of the questions I had from a subscriber, yes, we are still in the short position. We haven't added to the shorts this coming week. I'm pretty sure I'm going to be starting to look at more shorts, but at the same time, I also want to look at some longs. I think just like we were in this big move down in the indices, 6%, 8%, we had long positions that held or long positions that went to all-time high. So you have to have a split personality, a bifurcated mind to be able to manage this. So far, I'm thinking M formation is what we're looking at. Weekly chart of the Dow, very negative. SPX, weekly chart is negative. It isn't greatly negative, but it's negative enough for me to say, just be very careful. Let me just get rid of this right now. There it is. Okay, so peak E, and I'm putting in a down arrow even before the day is closed. I should wait to the end of the day, but it's way underneath the 9-period moving average, way below the 14-period moving average, and everything about this says MACD is crossed negative, stochastics at 74%, under 80%. All it's saying is the designation as of now is a sell mode has been reached in the weekly chart of the Dow, the S&P, and as a result, I can expect sideways to choppy action, and I suspect slightly lower lows are still to come. I don't think there's a crash potential as of this moment, crash meaning really like a 20% decline. I think we've had our 20% decline. That was in December going to the January run-up, and I think now we're looking at a number of these 8 to maybe 12% corrections, and that's kind of what I'm looking at here. Some of the stocks have been beaten down, and some of the stocks are just attempting to rally. The QQQ, let me just finish this. The QQQ, yes, I'm going to say that I'm going to put a down arrow in, but it's acting very nicely. This could change from a down arrow. Now, the whole thing is any new highs over the next 3 weeks in the Dow, the S&P, the Qs, the IWM would be very positive and actually start a potential new buy signal to buy mode in weekly charts. So I don't think it's going to happen just yet. Let's go to the dollar. The dollar, as I said, was holding quite nicely. It is up 7 cents at 98.17. It's worked very hard to get to where it is. At least it's holding steady. And gold, as I said, was down a little bit. I'll be back, and we're going to talk about crude oil as I go out. I'll talk about crude oil. Crude oil is up 27 cents. It's just stuck in a range. We'll talk about it. I've got 5 or 6 questions that I want to get to. As soon as we return, Basil Chapman, Tiger Conditions Hour. S&P is up 38,000.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. So crude oil is stuck in this range, and now I'm going to draw a different rectangle. I'm going to put it in right here, and we'll see if it stays in this rectangle. Let's make it down to the 52.80 level and the 56.50s, and let's see on Monday or Tuesday where we are. I just think crude oil is not the issue right now. Okay, here we go. TLT is the most important. Nope, not for me. Good, get rid of it. I have to keep answering everything because yesterday I was on for 4 hours trying to get some part of the, with Windows 10, I've had the upgrade and a whole bunch of things. Oh, yeah. And then what happened was 4 hours to try to get things fixed that I could actually use the mic and everything. And then another hour because I touched something in TradeStation and it just disappeared. I thought, oh, no. And everything, I waited at TradeStation for an hour for help. This is at 6 o'clock. 2 o'clock to 6, I was doing my upgrade for my for the audio and video and all the settings and everything. And then for an hour, I was waiting at TradeStation, and then I got on, and the guy fixed it. I could have done it myself, but I was afraid to do that. And it took like 4 seconds, right? An hour and then 4 seconds. I don't know what's with them. You've got to wait and wait and wait these days. All right, next thing I wanted to mention was the TLT is really important because it has to, remember, 3 separate things you're looking at. You could call it 4, but let's deal with 3 at the moment. One is that yields, it's not the Fed, it is the competition, the international competition to have the lowest rate. They're not doing it on purpose in a sense, but then again, they're also doing it because they're raising money, it's really convenient, etc. They don't care about the consequences. They care about the near-term impact that helps them. So it's this competition for the lowest rate, number one. Gold is a currency of fear. It's been spiraling higher, and I think just right now it's in this rectangle formation. I think it's going to have a little bit of a rest. I still think it's in play, but I think it's due for some kind of a breather. So that's the second thing. The third thing is that the dollar I'll say it again. I'm calling the dollar the Harley of, not the latest iteration of Harley, because that's almost like Sears and Roebuck in a way, but the iteration of Harley Davidson being the American icon. I know that when I was growing up in South Africa, we spoke about Harleys, Cadillacs, Caddies, and Harleys. America was a tremendous influence. Jazz. I mean, I grew up listening to jazz and all that. So people just don't realize around the world the incredible influence of America. I know people talk in derogatory terms right now. I have to tell you that's not the reality. People repeat what they're regurgitating, what's being regurgitated on the news. But all around the world, many people would prefer to try to come to America than stay where they are. That's just the way it is. So I'm saying that the dollar is representing that. And I think the dollar is here for a while. I know they're going to talk about trying to get it down. Dollar represents the respect that that countries have for our currency. They might not like something or someone or it or whatever, but they do respect the dollar at this particular point. Okay, those are three things. I'm going to add the fourth contingent because this is exactly the period where I wanted to start bringing about the whole skyscraper. This is the iteration that I'd waited for. It is the part of my coda phase. This is the part of the coda phase that's going to be broken up into about 2 or 3 sections. And I'll be talking about just a little bit about it in my webinar on Wednesday night. But we are trying to prepare for it in the sense that there are stocks that are really key stocks to the growth of the country, to the structure of the country. And they've been beaten down. And they look to me, I'm not doing a fundamental analysis, I'm doing a historical repetition of the pattern that these stocks have had over periods of time. So I'm trying to identify those, and I'm also hoping that some of them also give a dividend, because wouldn't it be nice if we can have a stock that gives you a really good dividend, secure dividend, because there isn't a chance that this company is going to renege on giving you the dividend. And at the same time, there's a chance for not just capital growth, but really good capital growth. That's what I'm going to spend my time over the next few weeks. We're starting it now. We started it actually today, and might not work out, but we are starting implementing that thinking that there are stocks that are really what one would have termed in other eras a value stock. I don't think that can apply in the same sense. I think value stocks today, there are a lot of connotations. You've got the whole impact of Amazon on the retail sector. So there are some fundamental things that have really changed. So this is what I'm doing, and that's what I'm going to talk about Wednesday night. So I'm going to get off this, and I'm going to go. GE, the question was, what about GE? Well, GE got smacked yesterday. Just this report, actually someone who is short the position, and they had every right to talk about it. There's no reason why I shouldn't. People talk about on their long positions and why these are the most fantastic stocks. So he was talking about General Electric as having some fuzziness that was more than fuzziness, because he had documented where there were inaccuracies, etc. And it got smacked down and went down to $7 and was that 60 cents? 65 cents, 7.65. Let me type that in. A couple of people said grabbing it, just grabbing it. At the same time, others said, oh, geez, we've been grabbing it, and it's really grabbed us by the throat. It's terrible. Well, today it's up 70 cents at 8.71. It is above the gap down high of yesterday. It's still in the gap, and the last low was of consequence was on the 12th at 8.95. The day before yesterday's low was 96. So this is the area you got to watch. Now, here's the question. There are some people that have long-term, you could call it a call, but these are instruments that they've been able to buy that are like long-term options. And within that context, the question is, in January or February of next year, the question is, where do I think General Electric will be? Well, if there is any chance that they've cooked the books, that is just almost an impossible, it's really hard. I mean, look at Deutsche Bank. You know, when you do some fuzzy stuff, you can go down for a long time. Deutsche was just the beginning of last year was in the 20 area. Now it's down. It hit 640 the other day. 640s now it's at 685. So I'm just going to say, let's for the moment exclude the fact that there are going to be a couple of of reports that are going to come out, some verifying and some not verifying. I did read that the General Electric CEO had bought $3 million worth of shares. Whatever he's paid, I'm sure this is part of the process that he has to go through. I don't know if that's a commitment because he wants to demonstrate something and he can afford to put $3 million in because he's going to get a great deal more out of it. But it doesn't matter. The fact is, I'm looking at the chart, and this monthly chart is one that says something has to go right with General Electric very soon, because if there is a break under $6.60, $6.66 was the low that was made, remember, back in December. If that low is taken out on a monthly basis, really bad news is going to come. And they've just sold the property here in GE. You remember GE comes from Connecticut. They take their headquarters, they move it to downtown Boston. Almost at the height, they paid top dollar for the land, and they wanted to build this building and everything, and they built it, and it actually turns out that there's also water. You're going to get water damage because water comes flushing all the way up over the wharf right on the edge of the Seaport District. Anyway, besides that, they've now got out of the building. They sold it back to the city. This is going to be very interesting. I'll give you numbers to look at, and then I'm going to talk about NVG, MO, PM, and SPX. I'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So just real quickly, General Electric. If you're in a position of, if you're in General Electric already, you're probably at a loss. But my suspicion is that there's going to be a trading band, and how it breaks that trading band is going to be really important. You see this chart right here, the weekly chart? Well, the high and the low sets a really big rectangle formation. I really don't like to do that. I mean, come on, down to 7, was that this week? Yeah, 765, all the way up to about 950. Yeah, it can easily do that up and down and up and down. But what I would really say to you is, if you're looking at the weekly chart, let's skip the weekly chart. If you're looking at the daily chart, this is what I'm really looking at. You see, when you come in a convex and you come in this pattern right here, where you've got an arch formation on the right that comes down sharply, it can create a very sharp V that allows for a rally. And that rally says that GE has no choice at this particular point, because it got smashed so badly from the $9 level to the $7 level that it needs speed, and then it can take time. And the speed says that right now at 875, the high of the day, it needs to go by Tuesday or Wednesday. It needs to get very close to the $9.07 pink 9-period exponential moving average. And then it has to try for 931, which is the 14-period moving average. And I've got an arch formation. And what I'm going to say to you is that if you're looking for a trade, probably early this morning, just to grab some GE and say, you know what, it really got beaten down. If I have a 30-cent profit, I'm going to make my stop, my entry point. That would be the best. But even now at 875, I suspect in this environment right now that there's a chance that GE has very good support in the 850 to 840 area, and that just on a very short-term basis, there should be a rally attempt to get somewhere into the 830, sorry, it's 875, I meant 930 area, and $9.10 to 930 area. If it can do that and close any day at the high of the day, I don't care even if it has a tiny little move, but if it can close at the high of the day, gap up the following day, that says to me that this selling was overdone on a short-term basis, and that you could go a little higher. And to go a little higher, you need to see the MACD, which is very weak in the daily, start to move higher. And you need to see the stochastic at 13.9 right now. It needs to get to 16.80 or 17.33, something like that. And it needs to do that really by Tuesday or Wednesday. If at any point GE starts to fail, and you see GE trading even intraday at $8.30 or $8.30 or lower, I'm just going to say to you, please be careful. It is that oversold condition was not an oversold condition. It was, for some people, a perfect exiting position, because this thing could go and retest the 765 and even take it out. So it has to say it was an aberration, and you now want to see an arch formation form on the inside. So you got it on the inside coming down. I'm going to just draw this a little clearer so that you can see what I'm talking about. You see the way you made this, the lows were moving very quickly to the downside, but it was really holding the line, that curved line. Now you want the curved line to be resistance. So you want to see a quick move to hit that line at about $9.11, $9.18 by next week. So that's what I'm saying about G. Now, if you ask me the question, would I say to investors, hey, let's buy GE? I think there's some problems that need to be resolved, and I think we will get an opportunity. It might be higher, and it might be lower, but I don't think this is the opportunity I want to get into G. I think there's another shoe to drop. I don't know when it'll be, and it might come when G's a little higher, and then it suddenly gets a pullback. So I'm a little concerned about that, and I can't talk to January or February. I need at least 6 weeks of General Electric not taking out $7.65, probably not even taking out $8, but moving higher, and that will say to me, good. The next shoe that drops, now you've got a higher base of support. Next question is, Kevin wants to know about NVG. NVG is Nuveen AMT free Muni credit income. I think it's an ETF of sorts or a fund. Well, so the question was, I should have had the question already. Really, the question was, I'm looking for dividend stocks. I'm starting to look for here's a subscriber, and I'm just going to say, Kevin, we started one today. As of this very moment, it is up a couple of pennies. It is the start of something that says, yes, maybe we're looking at just the hint that fund managers are going to start looking for great stocks at big discounts that give a dividend. So in that regard, just absolutely coincidentally, on the same day, I had a bunch of questions about the same thing. So this is giving a very good dividend. I can't remember offhand. I'll try to find during the break what the question was. But I am going to say that this stock, this pattern I've spoken about for a couple of years now, it's what I call the worm. It's like a worm climbing the branch of a tree. And it just, there's the branch, there's the green line, the 9-period exponential moving average in the weekly. And ho-hum, every single week you could have bought this thing. And yeah, there was 1 week pullback and then whoop, new recovery high. Pullback, whoop, another recovery high. Is it going to do the same? Well, of course, now you're in leg E in the weekly chart. MACD is just starting to show a little bit of wear and tear, but still very strong. Stochastic looks great at 94%. So this is what I'm going to say to you, Kevin. I'm going to make the suggestion, the best way to get a feel for the stock, NVG, trading at $16.62, up a penny, is I think it's going to pull back to the 1650, 1640 level. And remember, it doesn't make big moves, even intra-week. It doesn't make big moves. It makes steady up, higher highs and higher lows. I'm going to suggest take a little bit right now at $16.62. If you have a portfolio that says, I want to start diversifying and I like this stock, I don't like to buy something this. Now, if you look at this on a monthly basis, I don't like to buy something that is at an all-time high. I don't like to see something that's made these big U-turns, making a high and then turning around. And this was the peak D right here back in July, I think, or whatever it was, October of 2012, and it pulls back very quickly from the mid-16s down to the 12s, rallies again, and has a high peak C, July of 2016, week of the 29th, of the 29th, and then it pulls back very sharply back to the back to the 1330 level, and now it's making an all-time high. I do call this a leg D, but everything about it is technically good. So why don't you do this? Take a little position. I really do mean a little position. Why? I want you to get a feel for how it's responding when we get that big pullback that we're going to get at some point soon in the TLT or the IYR, the REITs. Does this particular Nuveen ATM-free Munich credit income, does it pull back sharply? I suspect you've got to be ready that it could pull back to the 1630 to 1620 area, maybe even 1618. But that monthly chart is still very strong, and that weekly chart is still very strong. So if you're prepared, it might be that money's going to sit there idly, but just get a very small position. I'd buy it right here at 1662, expecting the upside could be just limited to maybe 15 cents, maybe 1 or 2%, maybe a little more. But then I think you can see something pull back, and then that pullback is going to be very important to watch. I'll be right back, and we'll talk about other stocks.
If you're in a CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, so here's another question. I kind of did it yesterday. Was it yesterday or the day before when we had a call? I had a call about the SPY. So the question is about the SPY. What about the bigger picture? And there's an analysis that was done. And so, George, this is what I'm looking at. The weekly chart of the S&P, as of right now, the day's young, it's options expiration, we're up 280. They could get it to up 380 by the end of the day, just give a real short squeeze, even more. It doesn't matter. Right now, what I'm looking at is that the S&P on a weekly basis suggests to me that it is still in a major bull market. And unless it takes out the low of June, the June 3rd low of 27.28.81, 27.28.21, and that could be, I just don't know yet. I'm thinking that the next, if you start to see a new high in the S&P in the next 2 or 3 weeks, yes, it would have an alternate counter of F/A, but if you look at this in terms of what the Dow has done, I have to put into the context that the Dow is a peak E. I don't think it'll go to an F and then pull back again. If it makes a new high, I think it's going to be forcing people into the market. This is, as I say, the stealth bull market, the quietest bull market that anybody's seen in I don't know how many decades. And a peak D in the weekly chart of the Qs. This is saying to me, and the weekly chart, the monthly chart of the Qs is still very strong. I think this is a rotational correction that we're seeing. This is not like the December one, where it was really, if you looked at it, I'm not going to say this was a Granville bear phase where you see 96% of stocks go down, but this is the greatest number of sectors that I've seen go down together. This is really very different. You're starting to see a rotation. Look at the way Macy's, I mean, this is all retail. Look at this, Macy's down again today, 16.3. In the weekly chart, look at that monthly chart, taking out the lows that were made back in 2017-18. This is not good. This is sector rotation. If you look at the IBB, you remember I was talking about the NASDAQ biotech sector, stuck in a range, but not breaking down, but really not breaking out. So there are things that, look at SLX. This is the S&P. Is that the S? No, the Van Eck Vectors Steel ETF, trying to rally here, an attempt, but the weekly and monthly charts look terrible. So this is rotation. That's the reason why I think that there is no rush now. So look at, was it, oh, I wrote it down. Didn't I write it down? What was the thing that had the FANG stocks? FNG? Was it FNG? No, I'm not going to guess. Is this it? What is it called? 80? No. All right, I can't remember offhand. This is the new tech median ETF. All right, I don't know. So, yeah, I think that this is still the digestive phase. I just don't. I think that we're going to be going sideways for a little bit and then doing retesting of the recent lows, and how that breaks, if it does break, is going to be important. Upside resistance break. So let me go back, answer the question specifically. I think that a chunk of the correction has been done just for now. Now there's this sideways. I don't want to see this turn into, let me just show you, I don't want to see this turn into a fulcrum for the same number of bars and same number of price to the downside in a Chapman wave parallel one-to-one expansion. I'm going to draw it in. You want to know what can work and what can't work. And that says that the move down from 3,027 to 2822, let's call that a what it is, the 200-point decline. Let me go right here. That could have a one-to-one relationship to the top, first of all, and that would just take you down to, I don't even know if I can see it. I don't know where it takes you to. I have to do it here. It takes you down to about 2,700, 2,680. At this particular point, I see enough evidence to say the upside is very limited, but I also think that the downside right now is becoming somewhat limited until the next series of bad news is there. So S&P, the answer is, would you be putting money to work now? If you have a 5 to 7% correction mentality from where we are at 28.88 right now, I'd say you can start the next phase of your buying as one little tranche that you're putting in just now, very small. Give it a test. If it takes out 28.15, you can even then decide, I don't have to put up with a greater percentage risk. It's broken key support levels. It's probably going to go down further. Just be very rational about this. I don't think I'd get into a full long position at this stage. I see no reason to do that. I really do not see any reason to do that. But I do see reason to start looking at certain stocks and certain sectors, because this is a very good time to see what might hold up, because they've been hurt so badly that they might start to form a base. I mean, look at the SLB, look at Schlumberger, SLUB. Good move today, up 1 at 32.66. But look at that weekly and monthly chart, not very good. At the same time, is this an oversold sector? The oil service, well, we'll know in a little while. So just be very selective, have some cash. Next thing is, Jason wants to know about Mo. So this is Altria. I never remember if Altria is the one that has the cigarette company still, or whether it's Philip Morris. I think they wanted to confuse everyone. So maybe Altria is the kind of food group. This is looking quite nice today. I almost put it on as a buy this morning, just as a trade. I preferred the actual chart formation. That wasn't the question, but I think Philip Morris, PM, trading at 85.11, up 62, has a much better chart formation right now in the daily, weekly, and monthly. I'm making no moral judgments here. You just choose. If you're anti-smoking but you love the stock, you can buy the stock and then just donate as much money as you want to an anti-smoking, whatever it is. This is your business. I'm looking at the chart. You have to make a moral decision. So the chart says PM has already come off its low, and it's starting to generate some interest in price. The MACD is starting to almost cross positive in the daily. Stochastic's been rallying nicely. The weekly chart is improving, and the monthly chart, have a look at this. The monthly chart has had, this is like a crown formation, goes through peak in the Chapman wave and then plummets down, breaks the 200-period moving average, closes quickly above the 200-period moving average, and then treats it as key support at 75.24. That's the better chart. MO Altria is still working on its problems. I wonder if that is Altria. I don't remember. I could find it out, but anyway, as I say, the moral issue is your business. If I put into my, I've had it once before. I think I had Philip Morris, and I said, this is a moral decision. I'm putting in the chart. I'm putting it in. I'm going to track it, etc. Whether you buy it or not, that's your business. Next question I had was, I just wanted to correct myself. I think I gave an incorrect bounce. NVG trading right now at 16.62. I've got this as a doji candle peak E, an inside bar, and then you've got a lower high today. MACD's just flattening out, but still good. Stochastic's really strong and flat at 88. On balance volume is very good in the daily. And the weekly charts are all improving. That's the reason why I said start a little position. But don't get carried away. Treat it as your pilot light for this stock. If it does make a new high, I still think that I could draw in a rectangle that says the 1648 to the 1640 level will probably be tested over the next 3 weeks. And then let's look at it again to say, okay, now do you want to add to it? But to get a real feel, have a nibble. I'll be right back. Basil Chapman, final segment coming up. Guys at 292. And I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So, folks, for my webinar coming up on Wednesday afternoon at 5 o'clock, 5 to 6, look, I make it as simple as possible, but believe me, it's not easy to keep the market as simple as possible until subscribers remind me and say, hey, weren't you supposed to keep it simple? Yep, I try to keep it simple, but it's not always easy. In the chapter where we try to identify the lowest low and count each successively higher bar at that fourth highest peak D, other things can happen. It can go to E, F, and G, but D is where you got to be a little careful. You see around the corner, you can just see leg D in the monthly chart. This is really important. I like to look at patterns. There's just straight up and straight down. There's the arch and there's the cup. You can mix them, but basically 3 patterns: straight down, arch, test the left side low, that's in red, because if it fails, it's very negative. Yesterday it held, and today it's much higher than the left side, 25,440 in the Dow. So that doesn't have to be red. That can say, okay, now you can go to a medium color, because you could make a lowercase h that goes to another arch, lowercase m formation. Or very positive, if it breaks to the upside, it's green, because if it takes out the left side high, that's important. So look, this is all we do. Look at the cup formation. There's the cup formation. Very deep handle, another little mini cup formation in the daily chart. It went to an E, it went to a D, but then ran up all the way to E at 98.68, took a deep breath, put to 97.03, and now it's holding at 98.24. Very nice action. The weekly chart, a whole series of cup formations, higher highs, higher lows. I love that. Is it doing it again? I don't know. We'll find out. Look at the monthly. The monthly is doing this pattern where there's like like Aladdin's magic lamp, big handle, cup formation, and a little arch. But wait a minute, if you look at the monthly chart, it's the same pattern. If I squeeze this closed, look at that. There's Aladdin's magic lantern, big cup formation, and there's a little snout. We're in the snout right now. So just remember, try to keep it as simple as possible. Doesn't mean you're always right, but at least you've got patterns that at least give you the guiding post. So for today, if the Dow, if there is a short squeeze into the close, it could still happen. That's okay. If it goes over 26,000, I would say that is quite impressive, but it hasn't changed my weekly chart for my subscribers over the weekend. I'll show you the charts. The Dow, I have to put a down arrow. It's officially in the sell mode. It doesn't mean say it has to go to the 23,000. It just says right now, the characterization says, be careful. You go choppy sideways to start in the buy mode. It's going to take a lot of energy in the daily chart. Have a wonderful weekend. Stay tuned for Steve, Dave, and I'll be